Alrighty. Doc here from North America. Good morning, good afternoon, and good evening. And numbers are coming out as we speak. The September PPI. We're still figuring the same thing. The numbers are going to be hot. Hot, hot, hot. And they're not going to be happy. And I guess we've finally seen more of the evidence of what's going on with Switzerland. They're just running out of American dollars. They just they've been floating money over to Switzerland through swaps, and Federal Reserve is the Federal Reserve of the planet at this point. They put themselves in that position, and there's no stopping it. Unfortunately, the world has become bankrupt from America. America bankrupted the world. They followed in the footsteps of our leftist, and oh joy, the world is paying for it now. And so, let's see, what do we got going on today? There's the dollar. It's why it goes up is because there is just super demand. Let's see if we can put the article up on there. Which one can I do that from? Let me try it this way. I'm going to put the article up there about the swap process going on with Switzerland and the Federal Reserve. Let's see if I bring that up like so. Just figuring out how to do this without freaking things out. There we go. And I hope I did say good morning, good afternoon, and good evening anywhere and everywhere. Let's see. Right there. No, let's go like that. Oh, who's that at the Institute today? All right. And there it is right there. So let's grab that puppy and move her over to you. And you will be seeing it hot and heavy. Funding panic imminent. Fed quietly sends $3.1 billion to Switzerland via swap line. And we have a chart there. There's the do-re-mi going in. They were propping it up for, let's see if I can go like that. They were propping up. Let me get those dates right. So they were propping it. There's the glasses. Where did I put the glasses? They're going to be right here somewhere. I need my cheaters to be able to see. Oh, I bet they're in the pocket. And so what you can see is right here. Let's go back to that again. That's the end of 2021. They had to, you know how I talk about at the end of the year we usually learn what was going on. Now that Mr. Biden is in the White House, they don't even they've stopped reporting information altogether. They're just, it's just full control of information. Remove anything that even remotely would inform somebody of a different story than the one they want you to believe in. So you can see there at the end of 2021, they had to prop up Switzerland's national bank with a good size amount, another couple billion in dollars. And then you can see all the way back here, let's see, let's see, what is that? Is that the beginning of it? Yes, so that's the beginning of the end of 20. They had to prop it up with almost the same amount of about $3 billion. So I guess in the end result is that money we've been trying to, let's move this off the board. We've been wondering in many different forms, why are we seeing, let's go to the Swiss too. Let's just jump right to the Swiss. I mean, this is the dollar index here. You see the dollar index over there on the J4X. But what it really comes down to, hey, Thomas, how you doing? Hey, Robin. Let's see. I guess what it really comes down to is the dollar's just been running strong, and it hasn't been able to back off. Okay, and the reason why is there's a shortage of dollars across the planet. I know that sounds strange, but yeah, that's what it comes down to. Because what's happened is that there's a lot of leverage plays. Unfortunately, the revolution that I'm a part of has never come to full fruition. So in other words, the option derivative universe which grows every year compared to the rest of the financial markets across the planet, minus, of course, the bond market, all that borrowing. So the two big competitors, I guess you could say, that are growing every year is more borrowing by the governments and bonds, and more traders into the option market. And so, like the exchanges themselves have diminished in volume and trading. There's a lot of black pools and a lot of different games that are played to make it look like there's activity. But overall, there isn't. Liquidity has dropped. But the revolution that I've been part of since 1979 is the options market. And a lot of people probably go, oh, yeah, I heard about that. And that's probably where it begins and ends. And if you utilize the options market, then you don't have the margin problems. You don't have the risk, and you have the potential for more gains. And you don't have to liquidate. And you don't have taxation where it used as much as it was predominant. When you just go and get rid of longs and things like that. And take profits. And end result is that the options market makes the world work better, and that's why it's not working better, because people just don't utilize it the way they should. But anyway, that's what's going on. There's a need for dollars, and because the world is bankrupt, and as much as they want to pretend that things are better, we had a event that occurred in 2008 that wiped out enormous amounts of equity across the planet, bankrupted some of the most major companies in history, and they still exist today in name, but they are literally, what we call the walking dead. They're the zombie companies, like a Merrill Lynch and a Lloyd's of London and a Citibank and a Deutsche Bank, and I could go on and on and on. There are just so many of them that are still walking around today that should not exist. So, because they were run by bad people, that didn't understand finance, and they were just salespeople, and they just buried the world economy, and that's what happens. Traders themselves, we moved out of the retail side a long time ago, and with it, the salespeople came in, and that's what happened. So anyhow, that's the reason why. And let's jump over to it. That's why the Swiss is heading towards. Oh, look at that too. There, the dollar Turkish lira will not let go either. There's another one that's having its issues. It's a liquidity problem, and you can see here the Swiss is up at the par mark, to the dollar. It's having a lot of problems there, and it doesn't seem to match anything else that's going on compared to the other currencies against the dollar. So we've been questioning that particular event. We watch it every day, we talk about it, and we're like, wow, what is that problem? Is it the Swiss Credit Suisse? Maybe that's what it is, we thought. And it's probably a part of the Credit Suisse problem, and that is that they need capital. And they have like an $8 billion margin call coming around the corner. And if the country itself needs $3 billion to borrow from the Federal Reserve, what do you think $8 billion is just by one company in that country? That must be really, really expensive. An $8 billion price tag. That has to give a lot of pressure to the economy there. And the country itself. So money is not exactly like rushing towards it. And we were thinking, oh, geez, why can't they just dig up some do-re-mi? I'm sure they've got trillions laying around in their banks. But people probably don't want to invest in a losing proposition. And, governments will invest in losing propositions because no one holds them to account for it. But when it comes to investors can walk with their money, go somewhere else. And that's probably the fear of it all. So there's that incredibly odd new range developed out of nowhere. Ever since inflation occurred, they probably had to adjust. Here, this is where the Federal Reserve woke up and went, oh, it's not transitory. And then what happened with the Swiss? Boom, it just exploded. So this was the point right there Right there was where they announced it. Oh, guess what? Inflation is not transitory. Whereas here at Doc, we've been saying that for over. Let's see. So that was March. I've been saying it since July of the year before that the inflation was here to stay. So it was pretty obvious that the inflation was here to stay. But that is the rift of it all in the end. Not much more to be said about that because I could just ramble for hours about the ridiculousness of it. Let's just look at the products themselves and let's answer some questions and let's do our thing. All right, now from there we jump back over to the dollar. And there it is. You can see the dollar is just inching along, holding up firm in that long weekly buy. See it over there on the same situation on the J4X, doing the same things. Ooh, what did the number say? Well, the Dow is only up 36 now. Year to date. That's wrong. Okay, yeah, the Dow's up 22 now. Okay, so whatever the number. Oh, September PPI, 8.5 versus 8.4. That's what I'm saying. Hot, hot, hot. September core, up 3 versus up 3 estimated. So that's okay. The estimation wasn't bad. That's good. So we're figuring tomorrow it's going to look the same exact way. It's going to be hot, 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 especially with the core side of it. And that's where we're going to watch and see for tomorrow. That'll be more entertaining. And you can see here the dollar, is trying to make a little curve here. Awful hard for the dollar to correct, with all these, I guess you could say, short squeezes of dollar. How can you sell dollars when there's a short squeeze of dollars? Year over year, 7.2 versus a 7.3 September core PPI over year. September PPI was actual 0.4% up versus an estimated 2. That's hot, hot, hot. And that's what's going on there. Bonds are up just a tad here, just a couple bips. And, it's just a lot of issues there. There's a lot of squeeze going on because they need dollars. The world is running by dollars, and obviously if BRICS and all those other derivative or alternative, that's it, not derivative, alternative products had some value to it, then we wouldn't have this problem. But we do have this problem because, again, the world is short dollars, and it needs dollars. And people are like, well, I don't understand that. So that's pretty much the name of the game. All right, let's jump over to the euro now instead of looking at the Swiss, since we've seems to have finally answered the question we've had for months now about the Swiss. And there it is for the euro. Euro is unchanged, kind of cool, just kind of hanging out. It's naturally just drifting back up. It is an alternative. There's no doubt about that. And that's not going to stop. Let's see, what else can we say about any of that? I guess that's, you can see we've gone on for weeks, months now. We're 9 weeks into a weekly sell, from the 102-ish area. So we've been bouncing in the 95, 96 up to par area, which is pretty cool. And can I actually say anything more about that? I kind of doubt it. All right, let's take a look at it over on J4X. I'm sure it's going to show you the same story. That's why we have both of them up on the screen. Let's see, right there. Oh, right there. And you can see it's been sliding down the same way with the red right there. And you got the red right there. And the green line is underneath the dashed line, just like the green line is below the 0 line here. So that pressure is on, not taking out any new lows, whereas obviously we've seen the Swiss do things like that. It's been taking out some really interesting price ranges itself, And as much as we can say, yes, obviously the euro is at historical lows, no doubt about that. But I think it's a good alternative at the moment on some level. And I don't think we have much other way of really looking at that. All right. Let's see. What else should I go after? Okay, let's go to British pound. Right there, I'm answering somebody's text. And you can see here, same situation, breaking down, but not taking out the lows like we're watching the Swiss do right there. And let's put it up on Chicago Quant to show you that it's matching up fairly well. Yeah, you see that, it's 4 days in a red. It's got 5 days in a red right here, and that's pretty cool. And you can see it's trying to turn right there in that, on the J4X. And we're trying to do the same thing right here. And once that becomes a green and that's turned, and it says, basically the trend has shifted to the upside. And, there's not much more to be said about that. The cable. One thing I heard the Exchequer, which is their central bank, said they were going to stop on Friday. Told commercials to buy up the bonds you need because we're closing the window, that type of thing. And then I heard now they've changed their mind again. So with the world starved of dollars and capital, they're not going to let the system freeze up. They're used to floating everything and anything, and everybody's out there. I guess it's like the classic old Western movie where, some town comes across something, nickel or gold or whatever, and, or silver. And, and the town now, instead of like a steak costing like 10 cents, costs $1. And if you want to buy a shovel, it costs $1. And instead of 5 cents, that type of thing. I mean, incredible inflation because of the money floating all around the town, and they gamble like mad because they're willing to die to be rich, and the world is that way right now. They're willing to die to be rich, and they want to be, and they want these zombie companies and zombie banks with the same people who put them in trouble before to keep on running them now so that they benefit from the irresponsible zombie bank leadership or the zombie brokerage house leadership or any of that stuff, and that's pretty much where we're at. So we're like the only game in town, and America is the gold mine, and in the end who wins is the locals in the town itself. And that seems to be the only way to really describe the craziness that we're seeing financially. And it probably won't go away until we get some real adults into the government again. And, and that's pretty much it. And it won't go away. And we're going only ones, we got them. We got the dollars. We can print them. We print them. That's what it comes down to. We print them and nobody else can. All right. From there, where else can we go? Should we go to the Swiss again? I guess we could go over to the Swiss. We've made our case with the Swiss. We've been confused about the Swiss. We thought it was Credit Suisse. And the end result is they've just run out of money. That's so I'm not even, I'm not worried about looking at it that way. It's just is what it is. And right there is the Swiss. And you can see it's just, holding up pretty firm around the century mark. And what else can we say about the Swiss more than that? Probably, if anything else you can say about what's been going on is, I guess, how this plays out in the end. You got to wonder. We've always respected the Swiss banking system. And I guess, we've seen Deutsche Bank. We've seen Citibank in the United States. We've seen Lloyd's of London. We've seen Bank of Scotland, RSBC. I could keep on going. I mean, literally, Merrill Lynch, Wachovia, it just goes on and on. Bear Stearns. I mean, it just goes on and on and on of companies just busted. So I guess if they only lose Credit Suisse over time, or I guess, will they have what we're probably not seeing? We're probably not seeing the merger propositions going on behind the scenes. And if think of it this way: if the National Bank of Switzerland needs $3 billion, not even trillion. It's not $3 trillion. It's $3 billion from the United States to keep things liquid. Then the bigger question is, and there's an $8 billion margin call going into 2024. Then the bigger question is basically Credit Suisse in the same situation as Deutsche Bank? Deutsche Bank, they cannot find a way of merging it with anybody because they just had so much risk. The Deutsche Bank had over 73 trillion in swaps, and now they're down to about 29 trillion. They're slowly whittling it down, and I'd imagine when that thing gets down to about $1 trillion, or 5 trillion, or 3 trillion, or something like that, maybe someone will merge with it. I mean, they couldn't merge Commerzbank of Germany with Deutsche Bank. It was that bad. It is that bad. And so the question is, I imagine the other Swiss organizations have no interest in getting near Credit Suisse until it's all resolved. And obviously this is, the final shoe dropping this morning when we found out about the swap and the necessity of it and the history of the swaps going on for like the last 2 years. It's obviously something that's been going on for a while, and they're propping up Credit Suisse, and I don't even know what the stock price is, but I would imagine it's just like Deutsche Bank or Citibank. Matter of fact, I saw Citibank. Citibank's all-time high is $667 a share. Yesterday it closed at $40 a share. That's what we call in America bankruptcy. That's what we call a bankruptcy price. $40 a share when the all-time high is at $667. So, Deutsche Bank is the same way. Its all-time high is something like, $72, and it's trading at, like $6 or $7 a share, that type of thing. So, obviously, there's not a lot of, they have all these rescues all the time, but it's definitely, we're looking at a world that's in trouble financially. And can it clean itself up? Most definitely. Will it clean itself up? Most definitely. Will the leftists like this? Oh, they'll hate it. They will hate it because they like to spend other people's money. And that's what the problem is it's coming to an end. This November election, we're expecting to see the beginning. We've seen it happen in Europe. We've seen Sweden go to the Conservatives. We've seen England move the Truss, who is a conservative, and we see now Italy for the first time has moved to the Conservatives with a real government. So the world is seeing it. We're seeing it, and the leftists keep on singing their song about communism and socialism and how great it is. But that's all right. That's what the First Amendment's all about. It's all about being free to say what you think. All right, from there, let's jump over to, let's go to dollar Turkish lira. That's like, whoa, I can't wait to figure out that story. Look at that one yesterday. Now, we take a look at that. Let's just double check it with the euro Turkish lira. And you can see they had the same type of action yesterday, too, just nowhere near as insane. And I guess in many ways we are not hearing the story probably of the dollar Turkish lira is probably starved. So yesterday's range now is 1566 to a high of 1971. They've gone third world on us. I mean, honestly, we've got a major, European country, Asian American, Asian European, I don't know what you want to call it, but in the end result, Turkey is a major economy, and it's having massive financial problems under the great leadership of their country. For the last 10 years, we're seeing a country that's seen its currency go from $1 to 1 Turkish lira, now to as high as 1977 yesterday, to $1. Ouch. I mean, that's obviously not a good thing. I myself was excited. They had created puts, they were giving free puts out to people who invested in the currency, and I thought that was brilliant. I mean, you could raise taxes, resolve issues like that, and not spend, in critical cash, just give out the difference between the loss. Whereas you have to go buy up the whole currency itself. That's pretty expensive. But no, obviously they've done something, and this is obviously at this point in time we're gonna go with the same situation that's going on with Switzerland, and that is they are starved dollars, and you can see it in the dollar index itself. Turkish lira is Turkey is starved of dollars. And I guess, when they don't get along with the Federal Reserve, then it makes it probably even worse. So, that's where they're at. And that's really wild. I mean, that is wild. They're even showing that as a settlement at 5 o'clock yesterday. At 5 o'clock Eastern Standard Time here in the United States. And then somewhere along the line, they opened it back up again, $18, or, from 15 or 16 and change to there. It just shows you the illiquidity of their circumstance. That's all it comes down to at this point. And the world is starved, and there's not much that can be done until, responsible people come back into government. And unfortunately, that seems to be a missing factor. We need political leadership that's willing to invest correctly. And it just isn't going to happen. So, in the end result is, from there we'll go over to the Euro Turkish Lira, right there. And as you can see, they had the same type of damage yesterday. They went to 17.5 and then started back up at 18 and change. And, lots of gaps, lots of illiquidity. And I guess they're leaning towards the European Central Bank on some level with the Euro Turkish Lira. And it's obviously smoother and it's much more liquid right there. That's pretty cool. So, from there, let's jump over to, where is it at? Let's put it up on the screen here. It's going to probably look wild and woolly. And there's the dollar Turkish lira, showing you the same thing. Actually, we're showing you an 18.4 yesterday. No, what is that? That's yesterday. Okay, and then they're showing what? An 18, remember, this is a hinky ASCII. And then let's try it on the Euro Turkish lira and see what that looks like. Usually that represents more, but remember that's an average, so they're using a lot of averaging going on there. Now there it's just showing the same lows for the last 3 days. All right, so from there let's do this. I want to go back to the dollar Turkish lira again. I wonder what the volume looks like on that. Just buried down there, isn't it? So in this case here, let's put up on the screen again on Chicago Quant. So it took out that low in the United States. Interesting. It did take out the low of a couple days ago. A couple weeks ago, maybe? Is that it right there? I think this is right there. You see that right there is, I think, this here. I think that's what that is. That's the low there, I think. So this is a pretty distorted thing. Problem is that it's from a reputable, data feed. So we're really seeing some real sloppy execution at this point. Starved world. SOS. Starved world. And that's pretty much what it comes down to. All right. From there, let's jump over to the Canadian. Let's see what the Canadian's doing today. There's CAD. Still lifting up a little bit. It's still up today. Let's go over to here and see what it's doing there. There's the CAD. Up a firmness. And I think at the same time we are seeing oil down. Let's see, what else can we say about that? And then let's check out oil too. There's oil. And oil has been going down for a couple days, so that makes sense there. We're just confused why the Canadian didn't lift with this. Could they be starved also of dollars? I mean, is pretty much most of the currency problem at this point a lack of liquidity? I mean, when you look at the Turkish Lira, in both forms, euro and in dollars, obviously it's starved. There's a liquidity thing. When it comes to Switzerland, where we've seen the currency trading at really high numbers, and obviously, it's starved also. We have a sneeze coming. I knew that sneeze wanted to come out. There we go. So, crude oil. I'm amazed that crude oil finds a way to go down. It really blows my mind. And all we're seeing here in the States is gas prices, for the automobiles going up. They just keep on taking more of the price up. Each day it seems like a couple cents here, a couple cents there. Before you know it, we're at $4 again. We're just underneath $4 as we speak. Let's go over to... So there's the CAD. It's lifting. And you can see oil turning at this point right there. Now let's take a look at gold right there. And gold is perking its head up today. You would think, obviously, if the world is starved of dollars, then, why aren't they just buying the heck out of gold? But obviously, there's sellers of gold. It's the strangest thing. I guess you could say, in the long-term view of it all, well, the gold is like, before this crisis occurred, gold was at like, $800 or $900 an ounce, $700 an ounce. And now gold is trading, as high as $2,200. So it has almost tripled from that point and then taken out all-time highs. I think the all-time highs were like around 2,000. So we're 1,990 something. And then when you got inflation, and the end result is that we're really looking at a world that metals are just not as popular as you would think they are. It seems like they are with the banks. The banks are not willing to sell any of it. But somehow or another, paper gold is being sold like it's not worth anything. It's definitely being pressured, just like the bonds. I mean, if we're at 8.5% inflation, and you asked me, 10 years ago, what happens if we're at 8.5% inflation? I'd be like, oh well, bonds, 10-year bond would be trading around 10%, something like that, But 10-year bond is really trading at under 4%. So if they can do that to the world bond market, then they could easily do the same thing to the world gold market and silver market. And that seems to be the whole thing there, Selling gold to raise dollars? I guess, I mean, that would make sense, Robin? I mean, they need dollars, and they're not willing to deliver gold. Remember, it's more distorted than even what we're talking about. They're not willing to deliver gold. People don't want to deliver gold. They'll deliver paper gold, saying that they owe you gold, But when it comes to actually delivering the bars themselves, they're really, very stingy about that. So yeah, I guess in many ways you would think that they're backing up those swaps with something. So they must be backing it up with, gold and silver. And then I guess think about that. We saw silver jump. So probably what happens, they probably had. Remember, I said I thought that the jump was from closing out the silver gold short. I was saying that weeks ago and days ago and so forth. I say it every so often. I think that's the logic of it all. That's the only reason why we saw silver pop, because platinum didn't pop, and silver popped first, which is usually odd. And of course it's odd because now here you see them all retreating. So I guess that's really that's probably the real action of it all, is that they were probably closing out Swiss silver gold pairs trades. And they probably, flattened that out so that they could get some cash so they could borrow, do a swap. Because they needed dollars. So, and when you think about the size, if Switzerland has to borrow from the Federal Reserve $3 billion, that's it, $3 billion, not trillion, billion. Then it just shows you the starvation, the lack of liquidity that's out there. Then you go and look at the Turkish Lira, and you see those wild, wild races going on. And that's pretty much the whole, craziness that we're seeing altogether. So, all right, so looking at that, one thing has been very consistent, and that is the South African Rand. The South African Rand really does follow the metals complex really well. As you see here, as it lost value against the dollar, rising up, you see gold has been going down at the same time. And that's the pairs trade. That's the classic, this particular product more than most, which is really, really cool, that, you have that type of constant consistency, whereas we see that sometimes with oil and the Canadian, but of late it's gotten weirder. It's not, it just isn't always following, doesn't follow that pattern all the time. And as a hedge trader, I like the idea of having, something that, matches up. Having a better idea, confirming, a second opinion. That's really what it comes down to. As much as we trust our math, it's always nice to have a second opinion. As you can tell, I'm still fighting the cold. I am excited and I am yakking away and so forth and so on. But, it's still a battle. I feel better today than I felt yesterday. And hooray for us, So, from there, let's jump over to... Where do we go from? Oh, we go to the yen. Oh, and you know what? We saw that situation where, Bank of Japan had problems. Bank of England had problems. Now, the Central Bank of Switzerland having problems. Usually when those things have problems, maybe it's time we're coming to a bottom. Maybe we're finally coming to a bottom in this whole marketplace. I think that the election and, this new numbers coming out tomorrow will, give us a much better insight of what's going on. And, Jamie Dimon came out and said we're going to have another recession after this recession. So we're going to have like a whole year of recession, 12 months instead of just 6 months. We're up to 6 months now of a recession. And now he says we're going to have another 6 to 9 months. It's kind of like the groundhog, waiting to see when spring comes. And then and he thinks that the stock market's going to lose another 20%. So, there's a lot of, people out there concerned. And I guess you could say this, too. I don't think I have do I have a Jpm stock in here? You should see what's happened to... JPM is probably one of our best banks in America at this point. It's probably one of it's one of the most productive, healthiest bank we have, and it's down 15, 20%. Maybe that's what it is. I think we'll put that up on the screen in a few seconds. Let's finish off the currencies. But I think it's well worth looking at. I mean, if Jamie Dimon is starting to throw out crazy ideas like that, then you got to wonder, what's next on, what is the next shoe to drop at, another issue, And there's the yen. You see, like we talked about this yesterday. Yen looks like it wants to break out of the range, and it has. It's taken out the 45 with no problem. In that long 9-week adventure on the upside, it's had some issues now for a while. I guess they can only be cavalier for so long. In other words, be so brave to be, irresponsible. I find pretty much the world's central banks totally irresponsible at this point. I think, Bernanke getting the Nobel Prize. Only thing worse than Bernanke getting the Nobel Prize is Paul Krugman getting the Nobel Prize in economics. Bernanke has now won. I mean, I think he's a smart guy. I think he wrote some interesting papers. Do I think he led the world in the right direction for about a year? And then he put no safeguards on whatsoever what the politicians were going to do from there. So, he saved the world from the politicians, and then the politicians buried his legacy. So in years to come, people are going to go, wow. Then you have like safeguards. Someone needs to write a paper about how government spending money so easy and free and borrowing till the cows come home. In other words, being able to borrow until there's, just beyond the distance. You can't see it. They just keep on borrowing. And that shouldn't be allowed. And that's what I think this election is going to do. It's going to stop this craziness. Just stop it. I think that's what it comes down to. All right, and you can see there, yen is being the yen. Let's check it out over on J4X. Right there, same thing. Up and away, and my beautiful, beautiful yen. And then from there, we go over to the south of the border here in the States, who seems to be one of the more stable countries at the moment. Look at that. That currency, look at it. Solid. That's what you want. Solid. I mean, we go back and squeeze this thing up. It's been solid a long time in that range. You're only talking 20, 21 and a half, and the 19s and change. Is that what it is? Yeah, 1970, 1980, 20 and change, I mean, that and the Zloty. When's the last time we looked at the Zloty? Let's take a look at the Zloty. The Euro Zloty pairs trade. I mean, talk about a quality currency. I mean, it looks a little wild there, right? And you look at it, and then you go look at it over time. And look at it. It's been trapped between 4.5 and 5, from the panic of the inflation. I mean, look at that action. That's 4.5. What would Turkey do to kill for something like that? Wouldn't it love its currency to have been stopped at 4.5 and traded in a range to 4.9 instead of stop going from 4.5 to 5.5 to 6.5 to now 18.5? Look how nice and tight, solid economy, smart government, not throwing money out the door day in and day out. And they got the crazy, Russian situation on the border, and trust me, if it comes down to a fight between Poland and Russia, forget about it. Russia's gone. Because I think the Poles went payback for like the last 150 years. So, I mean, did you see the relief that they gave to Ukraine? I mean, they were like a mini America, bringing in money and, taking millions of immigrants in. I mean, millions, and children, and, people giving, what do you call it, baby carriages and food and clothing. Tell you, look at the currency. They can do it. The currency tells you they have the money to do it. It's the most second most powerful industrial nation on the continent, and it's like the 7th largest. So, yeah, that's what it's all about. That's what it comes down to. Responsible government, less government, and letting people be free. Free people, free markets, traders. Free people, free markets. All right, that finishes us off at the currency side of it. I am curious to go look at J.P. Morgan. I do want to see what they're doing. Let's go see. I am curious because I saw the stock trading around par. I was like, wait a minute, wasn't it $148 a share or something like that? So I am, I saw that. I'm thinking to myself, why is Jamie Diming saying some of the strangest things? I mean, he's supposed to. He is a salesman. I know that, but I mean, he's usually considered a smart salesman. So, I'm thinking to myself, why is he saying this stuff? Let's take a look at the stock. I mean, if he's going to come out and tell us that we have another 6 to 9 months of recession, let's see what he's thinking. I'm going to take a bite of an apple. When you have a cold, an apple tastes great. All right. Let's go find a spot to put JPM in. Right there. Right there, JPM. I could have sworn that thing was like on 140 or something like that. I really did. There's 130 something back in June. There's 140 something back in April. There's 160. 153. So what is that? Is that the 60 line? What is that? There's 155. 159.03 back in February. Okay, let's see what else we can find. Oh! Winner, winner, chicken dinner. 170 in November at the top of the market. $172.96. And where are we today? Let's check it out. Now we know why he's saying these things. It's trading at $102. So JP Morgan now from all-time highs has gone from 172 down to 102. No wonder he's saying stuff like that. He can't. He's talking his book. That's what we call it on Wall Street. You're talking your book. That's what we call talking your book. And so that's what's going on. He's talking his book. So in other words, he wants the world to know that the world is coming to an end in a handbasket, and there's no saving it. And that's why he's talking that way. Because I find it really odd. Because you know what I find odd? Is that he doesn't say we have 6 more months of recession. He says we'll have a recession in 6 to 9 months. Now, I don't understand what's going on since we're already 6 months in a recession already. So that's a salesman's technique. Something versus something. And that's pretty much the whole story of it all at this point. That makes sense to me. And and now it's answered the question. I thought it was 145 or something like that. I really did. I thought, I could have sworn it was in the 40s. I knew that much, maybe 150s, but I wasn't going to say that out loud, Yeah, I didn't want to get obnoxious about it. But yeah, so they've lost, when you're $172, your all-time high, and now you're trading at $102. That's what, I guess 50% will be 80, right? So we're like 37%. It's lost 30%, 37%, and it's considered the number one company in America. So that's the story there. Now it makes sense. He's talking his book. Remember, he's a salesman first, and Jamie is considered a very smart executive. I mean, he got billions for free from the Federal Reserve. They gave them billions and said, "Here, keep it. Just don't bother us. Keep this money. You'll never have to pay it back. We don't care. No problems." And they gave them Bear Stearns and all their assets, and then they gave them the most prized piece of real estate on Wall Street. That was a brand new $1 billion building that was just being finished. It was being constructed. So they gave them, JPM has, was propped up, and so Jamie looks brilliant, and so he's really built a lot. Let's see. We cover Forex, the U.S. futures, U.S. stocks, ETFs. If you have a question about any of them, just ask. Cool, Robin. All right, from there, let's take a look at silver. We'll finish off the metals complex. And there's silver, kind of inching along on the downside, and now we know what this was all about. This was closing out. That's exactly, and no one's coming out and saying it, but that's what I think it was. I think it was when you see silver go from basically 18 to 21, that means that they were closing out the spread. And you can see they started off when it was at 17 and change right here. They knew they were in trouble. They know they're in trouble. And they had to do something about it, and they took advantage of it. Good for them. That's good banking. From there, we'll take a look at copper. It's kind of cruising along, not making any noise, really. I guess not until the Communist Party Congress is over with, and then we'll see what goes on there. All right, from there, we'll go over to the energies. There's crude, as we looked at before. And here is Brent right there. And Brent is trading in the low 90s. That's cool. And, I heard yesterday, I think it was after the broadcast, doing the webinar, it was at, we're at 6-month lows or something. I think it's 6-month lows now in natural gas in Europe. So, natural gas, as much as they're constantly saying that, Europe is going to be in real trouble, I don't know. I think the story won't be clear until after the election. Because if this election comes out the way I'm thinking, we're going to be exporters again. America will be the world producer of oil again, like it was no more than 2 years ago. And we're going to see a lot of changes. We're going to see inflation dying down. It's going to be very positive. More responsible government. The world is built on credit at this point. So if you get responsible governments paying off their debt and reducing their debt, then what happens is that free markets are free people, and they start to grow. And that's what you really need is growth. Biden took over. The economy was at 6.2% GDP. It is now at something like, 1.5 minus. We've been in recession now for 6 months. And he won't say it. He was live on TV last night, and he keeps on talking about maybe we'll see recession next year, but I don't think so, he says. Well, we're in recession now, so what's that mean? That's going to come to an end soon? I don't get it. Jamie Dimon and him are playing the same game. They're trying to sell us something. And we're not buying. All right, from there, we go to the back month just to get a flavor of what's going on. You can see here the weekly has... let's do this, okay? And the weekly is now drifting underneath again like that. So you see that right there. We got the crude oil is drifting underneath the weekly as we speak. And then let's go take a look at the back month. I think back month was already reflecting that right there. Yeah, see, if it wasn't, it's doing it now, that's for sure. It's reflecting that weakness. And so that's the action we're seeing when it comes to the crude oil. Natural gas. Let's put the nat gas up there like that. And we'll put it up on J4X at the same time. There's right there. 6.6 now. We keep on finding ways to drift around and do nothing. That's good. We want to see it stay that way. And that's the natural gas. Then over there, we go and look at, we had the gold. You can see the gold's trying to perk up a little bit. Let's just save that one. And right there, like so. And then let's go save the silver, like so, which is still recovering from that wonderful bump that it had. And that probably tells us a story in the future to come when things become more responsible. That's why I keep on thinking the metals complex is going to have some strength in this time period. So that sooner or later this stuff has to kind of start to stabilize. We can't be irresponsible forever. It's not going to stay forever. So let's see what else we got going on. Did we show you we showed you the energies. Oh, you know what I want to look at is that natural gas in Spain was trading at 22.99 yesterday. And that's been a good indication of the trend. There it is right there, the Spanish gas company. Look at that, 22.41. Still dropping. So that just means the cavalry is on the way. Europeans, don't worry, we're not going to let you freeze. We're not going to let you freeze. We're going to find ways to send this stuff to you. The world producer will start to produce again. All right, let's just take a quick look of the stock indices. You can see the S&Ps are up 3 points. Excuse me. We started this broadcast, they're up 26 points. The Dow Jones Industrial Average is up, it's down $2 now. That's it. When we started this broadcast on the webinar, it was trading up 175 points. And the NASDAQ was up 150 points and now is up 10 points. So this is going to be lots of fun, lots of volatility over the next couple of days, traders. Everybody, heads up, stand to the side, let the dust settle off, and then jump on the math. So we're going to be out of here, traders. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Be safe, be smart. Wait till the tomorrow.